Something strange is happening in the market this week as the rally takes a brief pause. Check out the move in value stocks outperforming growth. Let's get to Bob Pisani, who's down at the NYSE with more on why investors are finding value in value. Bob.
It hasn't happened very often, but it's happening this week. It's back, that value trade, at least for the moment. The Russell 1000 value index is up fractionally this week. The growth index is down fractionally. Now, value stocks are typically companies that trade at a lower price relative to their fundamentals. Right now, they are largely financials, healthcare, consumer staples, and telecom names like Verizon, Procter & Gamble, Bank of America, and even Berkshire Hathaway. You see, they're all up this week. Growth stocks typically look for companies, or growth looks for companies that are growing earnings and usually growing sales as well. Techs are the classic growth names for the most part. And the FANG names, you noted this earlier, Melissa, they're the names that are all down this week. So no coincidence here. So what's behind the sudden value spurt? Technology and industrials, both typically growth sectors, have had huge outperformance since the December 24th bottom, while value sectors like consumer staples have underperformed. There appears to be some much-needed rotation going on. Still, don't get too excited about this. Growth has outperformed value for the last year, the last 5 years, and even the last 10 years. Why has this happened? Because growth after the recession became very hard to come by, so investors paid up stupid prices to get growth. Value investors like Warren Buffett have been shaking their heads ever since. Melissa, maybe this time they'll finally be right. Back to you.
A lot of people are hoping so, Bob. Thank you, Bob Pisani at the NYSE. Our next guest says this is just the beginning. 2019 will be the year of the value trade. Let's bring in Todd Walsh, the CEO and portfolio manager with Cubed Investments. He manages more than $1 billion for more than 3,000 clients. Todd, great to have you with us. Welcome to the show.
Thanks for having me, Melissa. I appreciate it.
So in terms of your style, are you always a value guy, or was this an active change?
Yeah, we're kind of go anywhere. You know, I agree with your technical read. The market, animal spirits could easily kick in, take us a lot higher. You know, we go guardrail to guardrail sentiment-wise all the time, so it wouldn't be unrealistic to expect that. But we're really optimistic, but not wildly bullish. When we look at what's really happening out there, kind of get away from all the volatility recently, you've got earnings on the S&P that are still going to come in the low single digits. They keep ratcheting those in, by the way. Then you've got comps that are going to be pretty difficult going forward, quarter by quarter. The 10-year has pretty much decoupled since the Christmas Eve massacre, the crisis lows we had, kind of suggesting what the Fed suggested yesterday, that maybe global growth is going to be less than we expected. So all that being said, we've got Europe, we've got China, kind of wild cards out there. We want a margin of safety, and we want dividends on our portfolios.
Before we get to your picks, because you did bring specific stock picks, when did you pivot? When did you go from growth to more of a value tilt?
We were a little early. So when we saw the market rush up in 2017, everybody made everybody a lot of money. Early in January 2018, the market went up about 10% in 1 month. The Fed was clear on their rate path hike. I've been doing this since 1987, believe it or not, and I've seen this movie before. The Fed will keep raising until they break things. So we kind of did it a little early in January of 2018, and then we kind of sat around and waited. So now that the volatility or the Fed or the Powell test the Fed put has happened, we think it's time to do some investing, but we want a margin of safety and we want dividends.
Let's go into one of your picks. ExxonMobil Energy has been a hot trade this year. Yeah. Are you getting a little worried that Exxon or energy might not be value for much longer?
You know, we love the dividend there. It's over 4%. CEO Darren Woods is moving away from sort of the domestic, high-cost, long-life projects into the frontier, resource-rich projects that he's looking at. We think that's a good strategy, and we love the dividend, and we want to wait, let management execute and enjoy that dividend in what we think is going to be a return-constrained market for the rest of the year.
You know, we were just talking about bunker stocks, and I see one of your names is Texas Instruments. So, you know, you were also talking about how earnings estimates have really come down, and they may continue to come down. I look at Texas Instruments trading nearly 21 times 2019 estimates that are actually supposed to be down 10% or so, with sales down in the single digits. What is attractive to you there? Is it that expectations are so low and that the stock will get cheap if it starts to?
You're hitting a part of it. Expectations are low. They've got some headwinds with the China trade wars that are going on. We think that's going to get resolved in the next quarter or two. And we've got, you know, outliers out there. We're moving to Europe now with the trade wars, but we think Texas Instruments will benefit from that. And we love the dividend. We want the dividends to do a lot of the heavy lifting this year. We really see a return-constrained environment, a range-bound market, and we need that push from the dividends.
Todd, if this value trade is going to work, how important are the banks to this call? How important are the oil and gas names to this call? Where are you in JP Morgan? Where are you Bank of America?
I think the banks are critical. We love JP Morgan, one of the best global leaders out there in the banking space, one of the best management teams, but also a leader in return on equity. We love that 3% dividend. We think they're just going to keep executing. If this turns into a muddle along kind of market, a muddle along kind of economy with none of these things really blowing up, not the soft landing that everybody hopes for, but more of a muddle along type of market, these types of stocks are going to do really well, and we're going to really benefit from these dividends.
Do they need yields up?
It's not going to hurt. And, you know, there's kind of a yin and yang there. If the market keeps doing better, what are rates going to do? They're going to start trailing in there, and the Fed's going to start making noise about raising again. Of course, you know, they're not 100% market driven, but that's going to come into play.
Todd, great to have you with us. Thanks for coming by.
Thanks, Melissa. Thanks, everybody.
Hope to see you soon. Todd Walsh, Alpha Cube.
Maiden voyage for Todd. Good to have him on board. I've no doubt he'll be back. And in terms of ExxonMobil, you know, I happen to agree with them. It's trading at 15 times, which historically is probably cheap for them. You're not going to get EPS growth, but you might get margin expansion. You might get multiple expansion, which might get it to a 19 or so multiple, which is about normal. You start doing the math, and this $78 stock could easily be a $90 stock.
Sector-wise, what is the biggest value trap in the market right now?
I think you got to be careful with the energy ones. You just had ExxonMobil go 65 to 78 in a matter of a couple of weeks. I think if you're looking for value, you know, Bank of America creeping back towards 30 is interesting to us. You start to get JP Morgan above 108. I think those are more timely longs here than maybe the energy names.
I think Todd's names, a lot of them made a lot of sense to me. The only one I would differ on, I actually bought JP Morgan just last week, and I bought, Exxon. I've had that for quite a while. I like that name. The free cash flow is unbelievable there. I think, and also you get the dividend yield. Like you said, they're pivoting from where they were internationally to where they are now. I think the most important thing, though, is that when I look at Texas Instruments, I would rather be in Intel, which I am. And I'm not in Texas. And the reason I am, I think the data center is an area that I'd want to be in. And I think this new CEO, even though it's not the one I would have selected, I think he's going to be able to direct this company the right way as a CFO.